Hello everyone, welcome to the channel Just Try, and here today I am Dr. Anurada Shah with you all and for another video on sample question papers. This video will be of a 6 marks question paper bunch, and we will start discussing about the 6 marks questions. So let's move on. So let's start with problem number 23. The directors of Rockstar Limited invited applications for 2 lakh shares of rupees 10 each, issued at 20% premium, and the shares were payable as rupees 5 on application and rupees 4 including premium on allotment and balance on call. So public had applied for 3,20,000 shares, out of which 20,000 shares were rejected and remaining were allotted on pro rata basis. Simba, an applicant of 15,000 shares, failed to pay allotment and call money. His shares were forfeited. Out of these, 6,000 shares were reissued at a discount of 2 per share. Journalize. So here first we have we write the journal entry as bank account debit to share application account debit. That amount will be 16 lakhs because so here as we can see that the question says that 3,20,000 shares amount was received and 5 rupees was application money. So therefore 16 lakh rupees will be the application amount that has been received. Now out of this 16 lakh rupees, share capital will have 10 lakhs. To allotment will go 5 lakhs and to bank will go 1 lakh. Now after that, share allotment will be 8 lakhs because it is 4 including premium, and that is the allotment figure. So as per that we will do the calculation that 8 lakhs is the allotment amount and 2 share capital account and 2 securities premium account 4 lakhs and 4 lakhs. Now after that we have a bank account debit 2,85,000, and over here we have calls in arrears 15,000 to share allotment 3 lakhs. See over here in the question it is said that 15,000 rupees 15,000 shares failed the allotment and call money. Okay. So after that we have first share first and final call account debit 6 lakhs and 2 share capital account 6 lakhs. Now bank account debit 5,70,000, calls in area 30,000 and 2 share first and final account 6 lakhs. Now after that we do share capital account debit 1 lakh, securities premium account debit 15,000, 2 share forfeiture account 70,000, 2 shares calls in area being Simba shares forfeited 45,000. Now after that we have bank account debit 48,000, share forfeiture account debit 12,000 and 2 share capital account when the shares are being reissued. After that finally we have share forfeiture account debit to capital reserve account 30,000 when we gain on reissue of the share capital, and the amount goes to the capital reserve. So here the working note is present over here that how many shares were allotted to Simba. Now excess amount that was received on application by Simba and the allotment where that was not paid by Simba. The calculations are written over here Please, you can go through the calculation so that it gets easier to understand how the amounts came. Now next, problem number 23 odd. Shaktiman Limited invited applications for issuing 1 lakh shares of rupees 10 each at a premium of rupees 2 per share. The amount was payable rupees 4 on application including premium, rupees 5 on allotment and balance on call. Now applications were received for 1,80,000 for which 30,000 shares were rejected and remaining applications or applicants were allotted on pro rata basis. Manthan, holding 5,000 shares, failed to pay call money and his shares were forfeited. Out of these, 2,000 shares were reissued at a premium of 3 rupees per share. Prepare the cash book and pass necessary journal entries. So, here we have share application account debit 6 lakhs, 2 share capital, 2 securities premium, 2 share allotment 2 lakh each. Share allotment account debit 5 lakhs, 2 share capital when 5 lakhs when the allotment was due with a premium. Now next, share first and final call account debit to share capital account 3 lakhs. Calls and area account debit 15,000 to share first and final call account debit 15,000. This is the call money received except of Manthan, and the share capital account debit 50,000 to share forfeiture account 35,000 to calls and area of 15,000 and the share forfeiture account debit 14,000 to capital reserve 14,000. Now the cash book with the bank column, here we see that 2 share application, 2 share allotment, 2 first and final call account, 2 share capital account and securities premium, and here we have buy share application account and balance. So once we write all the details from the question, we get this balance C by T. Now next sum, problem number 24. Rajinder and Vijay are partners. So this is a partnership sum in a profit sharing ratio 3:2. 31st March 2023, their balance sheet was as follows. The balance sheet is given over here. Capital account debit, Rajinder 3 lakhs, Vijay 1,50,000. The total is 4,50,000. The current account says Rajinder is 50,000, Vijay is 10,000. That is a total of 60,000. Creditor 75,000. General reserve 60,000. Fixed asset, goodwill, investment, stock, debtors minus the provision for doubtful debts and bank. The values are given over here. So let us see the question now. With the aim to expand the business, it is decided to admit Ranvijay as a partner. So here we are doing a admission of partners sum. So here the provision, the points that they have given are: provision for doubtful debts are increased to 6% of debtors. The outstanding for repairs is 50,000, which is to be accounted in the books. The unaccounted interest accrued of 7,500. Investment is sold at a book value. Half of the stock was taken by Rajinder at 42,000 and remaining stock was also to be revalued at the same rate. New profit sharing ratio is 5:3:2. Ranvijay will bring 1 lakh as capital and share of goodwill was valued at twice the average profit of the last 3 years ended March 31st, 2023, 22, 21 are 1,50,000, 1,30,000 and 1,70,000. So these are the amounts that are given over here. Pass the necessary journal entries. So let's start doing the sum. First, we have revaluation account debit 52,000, where provision for doubtful debts is 2,000 and outstanding bills and repairs is 50,000. Next, accrued interest 7,500, stock 8,000, to revaluation 15,500. Next, Rajendra's current account debit 21,900, to Vijay's current account 14,600, to revaluation 36,500. Being lost on revaluation, transferred to partner's current account. Bank account debit 40,000, to investment 40,000, being investment sold to book value, sold at a book value. Rajendra's current account debit 42,000, to stock 42,000. General reserve account debits 60,000, to Rajendra's current account 36,000, to Vijay's current account 24,000. Rajendra's current account debit 30,000, Vijay's current account debit 20,000, and to goodwill 50,000. Bank account debit 1,60,000, to Ranvijay's capital account debit 1 lakh, to premium on goodwill account 60,000. Premium on goodwill account debit 60,000, to Rajendra's current account 30,000, to Vijay's current account 30,000. And the working notes is also given over here to calculate the Ranvijay's share of goodwill and revaluation loss. Next, problem number 24, OR. Here, L, M, N are partners in a firm sharing profit and losses at a ratio of 2:3. On 31st of March, their balance sheet was as follows. This is the balance sheet where we see that the creditor is 80,000, bank overdraft is 22,000, long-term debt is 2 lakhs. The capital is given over here 6 lakhs 25, 4 lakhs and 5 lakh 25. The total capital is 15 lakh 50,000. Employee provident fund is 38,000. Land and building is given over here 5 lakhs. Machinery 2 lakh 50,000, furniture 3 lakh 50,000, investment 1 lakh, stock 4 lakhs, debtors 2 lakhs, bank 20,000 and deferred advertisement expenditure 70,000. So, on March 2023, M retired. So, the middle partner is going to retire and the remaining partners carry on the business. It is decided to revalue assets and liabilities as under. Land and building be appreciated by 2,40,000. So, it is appreciated by, not appreciated to. So, please understand the value, understand the term that is applied over here, and the machinery has been depreciated at 10%. 50% of the investment were taken by retiring partners at a book value. Provision for doubtful debts was made 5% on debtors. The stocks was valued at market price, which is 1 lakh less than the book value. Goodwill of the firm be valued at 5 lakh 60,000. L and N decided to share future profits and losses at the ratio of 2:3. L and N decided to share future profits and losses at the ratio 2:3. The total capital of the new firm will be 32 lakhs and which will be in proportion of the profit sharing ratio that of L and N. Gain on revaluation account amounted to 1,05,000. So, prepared the partners capital account and the balance sheet after N's retirement. So, partners capital account if we have to prepare. So, there first we have to write by balance B by D the values of the partners capital that was given, Then we have buy revaluation account 30,000, 30,000, 45,000. We have deferred revenue expenses as 20, 20 and 30. Investment account 50,000. Here 2 L's capital 64, N's capital 96. We have M's capital 64 and 96. To M's loan is 5 lakh 20,000. And we have by bank 9 lakh 7 lakh 9,000 and 14 lakh 76,000, and by balance we have 1 lakh 12 lakh 80,000 and 19 lakh 20,000. So the balance sheet shows us that creditor, bank overdraft, long term debts, the figures, capital account of L and M. Here we can see the values as we have written in the partner's capital account, and the total accounts to 32 lakhs. The capital, the employee provident fund is 38,000 and M's loan account is 5 lakh 20,000. Land and building is 7 lakh 40,000, machinery 2 lakh 25, furniture is 3 lakh 50, investment is 50,000, stock is 3 lakhs, debtor is 2 lakhs minus 10,000, provision for doubtful debts, that is 1 lakh 90,000, and bank is 22 lakhs 5,000. So you can see the total of both the sides of the balance sheet are matching. Now working notes. Working notes, the total capital of the new firm is 32 lakhs, where else capital, new capital will be 32 lakhs into 2 by 5, that is 12 lakh 80,000, and new capital of N is 32 lakhs into 3 by 5, that is 19 lakhs 20,000. Now problem number 25, Sandeep, Mahip and Amandip were partners in a firm sharing profits in the ratio 2:2:1. The firm closes its books on 31st of March every year. On June 30, Mahip died. The partnership deed provided that on the death of the partner, his executors will be entitled to the following: the balance on the capital account, which accounted to 1,15,000, and interest on capital till the date of death was amounted to 5,000. His share of profit till the death was 20,000. The share of the goodwill on Mahib's death was valued at 1,50,000. Loan to Mahib amounted to 20,000. It was agreed that the amount will be paid to his executor in 3 equal installments with interest at the rate 10% per annum. The first installment was paid on 30 June 2021. Calculate the amount transferred to Mahib's executor's account and prepare the executor's account till it was finally settled. Now, Mahib's dues that were transferred to the executor was 1,15,000 plus 5,000 plus 20,000 plus 60,000 minus 20,000, that is 1,80,000. So, by Mahib's account on 2020 June 30 will be 1,80,000. On March 31st, 2021, by interest of 9 months will be 13,500 to balance 1,93,500. Now next, this amount gets carried on to the next year, that is on 1st of April, by balance B by D 1,93,500 to interest 3 months 4,500 by interest of 9 months, that is 9,000. So the total balance comes over here 1,29,000. Now similarly, if we carry on 1,29,000 to the next year by balance B by D, by interest 3 months 3,000, by interest 9 months 4,500, and then by here what happens to bank second installment 72,000, that is to balance C by D 64,500, and this 64,500 gets carried on next year by balance B by D 64,500, by interest 1,500, and here to bank third installment 66,000. So that's all about Mahib's executor account. Problem number 26, Panther Limited issued 20,000 debentures of rupees 100 each at a 8% premium and redeemable at a premium of 15% at 4 equal installments starting at the end of the third year, starting from the end of the third year. The balance in securities premium on the debt of issue of debenture was 80,000, and interest on debenture was paid on 31st of March every year. Past journal entries for the financial year 2022-23. Also prepare the loss on issue of debenture account. Now, the solution for the sum, the bank account debit 21,60,000 to debenture application and allotment account. So, 21,60,000. Next is debenture application account debit and allotment account debit 21,60,000, loss on issue of debenture 3 lakhs, to 9% debenture account 20 lakhs, to securities premium 1,60,000, to premium on redemption of debenture 3 lakhs. Debenture interest account debit 1,35,000, to debenture holders account 1,35,000. Here the interest is being due to the debentures. The debenture holders account debit 1,35,000, to bank account 1,35,000. Statement of profit and loss account debit 1,35,000, to debenture interest account 1,35,000. Securities premium account debit 2,40,000. Statement of profit and loss account debit 60,000, to loss on issue of debenture account 3 lakhs. Now, loss on issue of debenture, the ledger, here we can show that by securities 2,40,000, and we have to premium on redemption of debentures 3 lakh, and by statement of profit and loss 60,000. Problem number 34. So, here we will have to prepare a cash flow statement from the following balance sheet of Arya Limited. Now, equity and liabilities, shareholders fund is given over here, share capital, reserve and surplus, non-current liabilities, long-term borrowings 1,50,000 and 1 lakh. Current liability, trade payables and short-term provisions. Assets, non-current assets, property, plant, equipment, intangible assets, property, plant and equipment. Non-current investment, and under current asset we have inventory, trade receivables and cash equivalents. Now, this is the notes to accounts. Here in the question, these are the notes that are given. Reserve and surplus includes general reserve, capital reserve, surplus, and long-term borrowings include 10% debentures, short-term provisions include provision on tax, and intangible assets include plant and machinery. So, this is the additional information provided. Tax provided during the year is 17,000. Depreciation charged on plant and machinery during the year amounted to 1,20,000. Current investment costing rupees 30,000 was sold for 40,000. Gain on sale of investment was credited to the capital reserve, and additional debentures were issued on 31st of March 2023. Now, solution. Cash from operating activities, profits before tax and extraordinary activities 10,70,000, plus non-cash and non-operating expenses. Depreciation on plant and machinery is 1,20,000. Interest on debenture is 10,000. Cash from operating activities before working capital changes is 2,37,000. Increase in trade payables is 18,000. In decrease in trade receivable is 1,74,000. Increase in inventory is 2,07,000. Cash from operations is 2,22,000. Less tax paid is 15,000, and therefore we have cash from operating activities 2,07,000. Cash from investment activities, sale of investments is 40,000. Purchase of investment is minus 70,000. Purchase of plant and machinery 4,05,000. Therefore, cash from investing activity is minus 4,35,000. Next, cash from financing activities, issue of shares is 2 lakhs, issue of debenture is 50,000, issue of debenture, interest on debenture is minus 10,000, cash from financing activity is 2,40,000. So, net cash flow during the year is 12,000 plus opening cash and cash equivalents 33,000, and therefore we have the closing cash and cash equivalents as 45,000. Now, these are the ledgers that were required to open for preparing this cash flow statement. The plant and machinery, the investment account, you can see from here. The provision for tax and the calculation for net profit after tax and extraordinary items is given over here. Thank you all. You have learnt, you have seen, you have studied, you have practiced so long. So keep studying and all the best for your exams.